Global stock markets sink as US President Donald Trump's reciprocal tariffs take full effect. Meanwhile, representatives from the Association of Southeast Asian Nations are meeting in Malaysia to address the impact of Trump's tariffs on the bloc. And the UK is reviewing a 400-page list of American exports as it prepares for an industrial fight back against US tariffs. Hello, I'm Tabor Aiden with the latest business and finance news here on TRT World. US President Donald Trump has been warned that his reciprocal tariffs could spark a global recession and have long-lasting effects. But the punishing new tariffs ordered by the president on countries across the world have just come into effect. Many goods exported to the US now have an extra tax of up to 50%. And for goods from China, that's now gone up to a huge 104%. Craig Boswell has more.
In the last hours before his country's specific reciprocal tariffs on imported goods were set to begin, Donald Trump said China would pay the steepest price.
Right now, China is paying a 104% tariff.
Earlier on Tuesday, the U.S. president claimed nearly 70 nations were lining up to negotiate.
And I call them tailored deals, not off the rack. These are tailored, highly tailored deals. Right now, Japan is flying here to make a deal. South Korea is flying here to make a deal.
Trump says China must also strike a deal.
China, first row.
In addition to the 54% levies on Chinese goods, Trump tacked on an extra 50% duty in response to counter tariffs announced by Beijing last week.
When America is punched, he punches back harder. That's why there will be 104% tariffs going into effect on China tonight at midnight. But the president believes that she and China want to make a deal. They just don't know how to get that started.
China's state broadcaster quoted the Ministry of Commerce vowing to fight to the end against Trump's tariffs. In Washington, the U.S. top trade representative defended the president's actions.
That he does not intend to have exclusions and exemptions, especially given the nature of the action.
U.S. lawmakers are questioning the impact of the tariffs on consumers and small businesses.
The tariff situation, I think, has certainly created a lot of uncertainty in the marketplace.
Since Trump ignited the trade war, Wall Street and global markets have lost trillions in value. The U.S. president believes he'll create more manufacturing in America and that China will negotiate. But as of now, there are no signs Washington or Beijing intend to back down. Craig Boswell, TRT World, Washington.
Now let's see how markets have been reacting. Asian equities have slumped, tracking Wall Street's losses as fears of a global recession weigh on investor sentiment. Japanese shares led losses, with the benchmark Nikkei 225 slipping more than 4.5%, while the broader Topix fell by 3.8%. Hong Kong's Seng index dropped by 1.7%, though mainland Chinese indices were up by as much as 1%, bucking the global trend. South Korean indices also slid by around 2%, while Taiwan's index plunged 6% after Trump threatened to hit chipmaker TSMC with 100% tariffs if it fails to build a production plant in the US. It follows a sharp sell-off on Wall Street that ended with all three major indices closing lower for a fourth consecutive session. Let's get more on this now with economist Sol Eslake in Sydney. Now, welcome to the program, Sol. Now, major volatility across the board. Can you give us a sense of the overall sentiment?
The overall sentiment is undoubtedly negative. What's particularly unsettling markets is the sheer uncertainty that now surrounds the course of not just tariff and trade policy, but almost every aspect of economic policy under the Trump regime in the United States. Not only is there uncertainty about the levels of tariffs being imposed and the reasons why they're being imposed, but there's also inconsistent messages coming from key spokesmen for the Trump regime as to whether these tariffs are things that might be negotiated away if other countries offer sufficient concessions to the United States, or whether they're to be a permanent feature of the trading environment. And in those circumstances, businesses who who might be contemplating undertaking more investment in manufacturing in the United States are unable to decide the sort of environment in which they might be operating. Businesses seeking to export goods to the United States are uncertain as to what they might have to charge their customers by way of higher prices in order to recoup the impact of tariffs. One thing that is clear, and that's very well understood by American people themselves, is that it's American consumers who will be paying the costs of these tariffs that the Trump regime is imposing. It's not going to be Chinese, it's not going to be Canadians, it's not going to be Mexicans, it's not going to be the people of Madagascar and Lesotho or the penguins on Heard and McDonald Island who'll be paying these tariffs. It will be American consumers, and that's why, along with the uncertainty that's now being confronting businesses, that talk of a recession in the United States is increasing, and because the rest of the world is still a bit fragile after the pandemic and the increases in interest rates that most countries have experienced in recent years to deal with the post-pandemic burst of inflation, that other countries are also vulnerable to the consequences for them of a US recession magnified by the trade policies which the Trump regime is now pursuing.
Right now, Chinese goods have been hit with the biggest tariff, but we're seeing mainland stocks rising at the same time. Why could that be?
I think that's because the Chinese authorities are directing state-run financial institutions to support the stock market. We've seen that happen before, for example, in 2014-15, when the Chinese share market had a meltdown of its own, that in the end, a floor was put under Chinese share prices by state-owned banks and other investment institutions putting money into the share market. The suggestions are that that sort of thing is happening again. The contrast, of course, is with what's happening in the Hong Kong market, where Chinese-backed enterprises, financial enterprises, don't typically do what the government tells them to do to support the stock market when it's falling. And of course, the Hong Kong economy is very closely correlated with the Chinese economy. So that's probably giving you a truer picture of what investors think the outlook is for China, rather than the somewhat manipulated outcomes that I think we're seeing in the Shanghai and Shenzhen markets.
Let's have a look at South Korea now. The won has fallen to a 16-year low, and we know that they are in negotiation with Trump at the moment. How are those negotiations going? Do we know anything at all at the moment?
No, we don't know anything about them at all. Mr. Trump did say over the weekend that he had a call from the leader of the Vietnamese Communist Party offering substantial reductions in tariffs, but Mr. Trump didn't indicate that that was likely to prompt a rethink of the 46%, I think, tariffs they are, that are proposed to being imposed on Vietnam. Korea and Japan are both being threatened with tariffs of between 24 and 26%. That's higher than being imposed in Europe. Korea needs to think about the extent to which they want to give in to this bullying by the United States, because history suggests that once you do show that you're willing to give in to the sort of intimidation that the Trump regime is now engaging in to countries as well as to its more traditional adversaries, that's just simply an invitation to come back to more. And maybe the won is weakening because the currency markets suggest or think that this tentative action on the part of the Korean government is a sign of weakness rather than resolve on their part.
Right, and we will have to leave it there. Sol Eslake, thank you very much for your insights.
Thank you for having me on the program.
Representatives from ASEAN, the Association of Southeast Asian Nations, are meeting in Malaysia to address the impact on the bloc, seeking a united response. ASEAN has a population of 640 million and is one of the world's largest trading blocs. Among the hardest hit nations in Asia are China at a combined tariff of 104%, Bangladesh at 37% and India at 27%. ASEAN countries have been greatly impacted, led by Cambodia at 49%, Laos at 48%, Vietnam at 46%, followed by Myanmar at 44%. Most of these countries have held back from announcing any formal response, but some individual countries are planning to negotiate with the US. Others, like Thailand, say they have a strong plan to handle the new tariffs imposed. Prior to Trump's Liberation Day announcement, China, Japan and South Korea held free trade talks to promote regional trade. Analysts argue this situation represents an opportunity for ASEAN to turn to alternative trade partners around the world. It also opens doors for increased trade between India and China. For more on this, we're joined by Ibrahim Sufyan in Kuala Lumpur. He's the director of the Merdeka Research Centre. Good to have you back on the programme with us. Now, ASEAN nations have been hit with some of the highest tariffs from the Trump administration. What's been the united response so far?
Well, thank you for having me on. ASEAN ministers of finance and their representatives had a meeting here in Kuala Lumpur yesterday with the Malaysian Prime Minister, who's also Minister of Finance. And from the discussions that took place and also the Prime Minister's speech, we understand that ASEAN will attempt to negotiate as a bloc with the United States. Now, I think that's no easy order because different countries have different levels of exposure and also are attracting different tariff rates from the US. But there is an attempt to represent the ASEAN interest in its trade with the US as a bloc. The Malaysian Finance Trade Minister has reached Washington. He's probably going to begin negotiations within a day or two, and we'll see what the outcomes are. But the response has been to try and negotiate as a bloc, even though I think it's a difficult effort because different countries have interests, and we know that Vietnam has reached out in advance earlier in the week and has already been rebuffed by the United States.
And what will be the impact of these tariffs on these economies?
The impact is going to be far-reaching because ASEAN countries taken together generally are export-oriented. Many of these countries feel that they are unfairly targeted because as the trade tensions between the US and China increased over the last several years, many multinational firms, especially American firms, relocated their operations outside of China to Southeast Asian countries, namely Vietnam, Malaysia, and to some extent Thailand. And these countries now feel that they are unfairly targeted simply because they are hosting American companies that re-export the finished products or partially finished products back to the US. Intra-ASEAN trade is still relatively low. From the data that I've gathered, it is about 26% of the average trade of the ASEAN countries are with each other. So there remains a lot of room for it to grow. The immediate impact, I think, is going to be far-reaching and quite negative because many countries are export-oriented. So we are going to see a very sharp slowdown in terms of production and purchases by their end customers in the US. And this inevitably is going to lead to slowdowns in production or even layoffs in some of the more labor-intensive industries like textile and some low-end electronics.
And do you see this disruption as an opportunity to strengthening intra-regional trade?
Certainly, I think from the speech by the Malaysian Prime Minister and the feedback from the other officials that have attended, I think that's certainly an area that they want to explore more deeply and urgently now because intra-ASEAN trade is very low at this point in time. And so the idea is to strengthen intra-ASEAN trade. And with this, it means they need to also address the barriers that they have for free movement of people and labor within ASEAN, the trade barriers that they have with one another, as well as increasing measures that promote trade with ASEAN as well as other markets. There are several mechanisms that already exist. There is a digital economic framework agreement that's currently in the pipeline. There's also an ASEAN-China free trade agreement that's currently being worked on. So I think Malaysia, as the chairman of ASEAN, is going to push ahead and try to get some of these agreements ratified within the current calendar year. But how fast and how much all of these measures will take effect remains to be seen because I think the impact from the tariffs imposed by the US is going to be relatively quick. It's going to have impact within the next few months on the ground here in ASEAN.
Ibrahim Sufyan, Director of the Merdeka Research Centre, thank you very much.
Thank you.
Now a quick look at some of the other top business stories from around the world. Another Southeast Asian country, India, has also been affected by the tariffs. Pharmaceutical stocks are falling after Trump reiterated plans for a massive tariff on drug imports. The US accounts for a third of the country's total pharmaceutical exports. On Wednesday, pharmaceutical stocks fell by 1.7%, while major companies like Biocon, Laurus Labs and Lupin among the hardest hit, seeing shares drop between 3% and 5%. The auto industry is also facing its huge challenges due to 25% tariffs. South Korea has unveiled emergency measures aimed at supporting its auto industry, including a $10 billion investment for 2025. The country will reduce car purchase taxes to 3.5% and increase subsidies for electric vehicles. While the broader auto industry faces challenges, companies like Volkswagen have seen some unlikely success, more than doubling its deliveries of battery electric cars in Europe. In the first quarter, deliveries surged to over 150,000, up from 74,400 during the same period last year. In contrast, Tesla sales in the region are on the decline, mainly due to Elon Musk's political posturing. And on Tuesday, the International Monetary Fund announced a staff-level agreement with Argentina for a 48-month, $20 billion extended fund facility. The deal is crucial for Argentina, helping to ease capital controls, replenish its foreign currency reserves, and address the country's inflation challenges. Still ahead on the programme, Britain prepares to hit back. Downing Street reviews hundreds of American products as tariff tensions with Washington escalate. Could a full-blown trade clash be on the horizon amid trade tariff escalations? We'll find out more after this short break. As Donald Trump's tariffs send markets around the world into chaos, the UK is planning an industrial fight back. Tülay Kalyon Haznederoğlu reports from London.
US President Donald Trump has ruffled feathers once again, telling the UK Prime Minister Keir Starmer that Britain must open its markets to controversial American meat or face new tariffs. But so far, the UK has been sort of lucky and only has been hit with a 10% baseline import duty.
Our future is in our hands. And so, of course, we will keep calm and fight for the best deal with the US, and we've been discussing that intensely over the last few days. but we are also going to work with our key partners to reduce barriers to trade across the globe, to accelerate trade deals with the rest of the world, and champion the cause of free and open trade right across the globe.
But behind the scenes, trade turbulence continues as UK officials are preparing for a possible tariff fightback with a 417-page list of American exports, from oil to whiskey, now under review.
So I think other countries should look at it. I think we should play it safe and just ride it out a little bit. I think we can't do it without American products. It'd be silly to think we can, but I think it'd also be silly just to rush in and do what other countries are doing and imposing tariffs that could hurt us in the long run.
A total of 15.3% of all goods exported from the UK in 2023 went to the United States, making the US the UK's one of the largest export partner. The UK exported almost $75 billion worth of goods to the US last year. The top of the UK export list was cars, followed by pharmaceutical products, mechanical power generators, scientific instruments and aircraft. Talks between the two sides are expected to continue, but for now, businesses on both sides of the Atlantic face fresh uncertainty. This latest escalation comes despite efforts to deepen post-Brexit trade ties between Washington and London. And with global recession fears rising, now all eyes are on Downing Street's next move. High stakes, hard lines, but Prime Minister Starmer promises no trade deal with America unless it puts Britain first. Tülay Kalyon, Haznedaroğlu, TRT World, London.
Let's speak with Josh Mahoney in London, Chief Market Analyst at Scope Markets. Now, Josh, what's been the market reaction to this latest hit from Washington?
Well, the UK markets have treated this much in the same way as many of the other markets around the world have. We're down around 2.5% this morning, but that really is a reversal of the optimism we saw yesterday. Part of it is around tariffs and the potential knock-on implications for the UK economy. But bear in mind, the FTSE 100 is so international in nature that it's more a case of worrying about a global slowdown, a global recession, and what that might do in terms of the outlook for business profits and revenues going forward.
Right, now the UK has only been hit with a 10% baseline tariff compared to many others. How significant is that in the grand scheme of things?
Well, in some ways, it makes the UK more competitive than the likes of the European Union. If they're getting hit with 20% and we're getting hit with 10%, then apart from competition against US companies, the UK suddenly finds it in itself in a little bit more of an advantageous position. Nonetheless, of course, it's not necessarily something that we want to see in place for an extended period of time. And remember that you have 10% on most things, but you've also got the additional 25% on cars, which, as you've alluded to previously, is a significant export good for the UK going off to the US, the likes of Rolls-Royce and Jaguar coming into play.
Right, and you mentioned those extra tariffs on auto imports, and also there are steel and aluminium tariffs. So what's at stake here for British industries?
Well, I mean, look, it feels like the UK has always sort of struggled on the manufacturing side recently. It also feels like any time the UK creates a really good business, it just gets sold off to the US, in particular over recent years where we've seen the appreciation of the US dollar, the weakening of the pound, and UK companies are getting picked off. So we don't necessarily want to be in that position where we see companies devalued and suddenly they start to get bought out because of that short-term devaluation. But in my mind, I don't necessarily think this is going to be a long-run issue. We're not in the same kind of position where we have a massive trade surplus with the US, and therefore it does provide the grounds for potential negotiation with the US over the near term.
And how could this impact the UK's trade relations with Europe?
I mean, I don't necessarily think that it's going to impact the European side negatively, because as we've seen in Asia, there's this feeling that countries need to start relying on their other trade partners more closely. So perhaps UK exporters would be looking towards mainland Europe as a key ally within this, the same kind of thing with Canada, who's looking to realign more towards the European region. Of course, Brexit, some will say this is the perfect example of why Brexit's actually worked out for us over the near term. And maybe this is cause for us to see closer ties following that breakup from the European Union.
And there's talk of a 417-page list of potential UK tariff responses. Do you think Britain is ready for a trade fight with the US?
In short, no. I think that the list is drawn up as a potential threat to say, if we don't have a deal, then this is what we might do. But if you look at what's happened in terms of China, trying to come back with 34%. Soon enough, they've got 50% added on. Now we're talking about 104% tariffs on Chinese goods. The UK doesn't want to be in that position. And right now, we're only talking about 10%. Hopefully, we'll be able to get into a position where that can be drawn down, and we see some negotiations already underway. There's confidence in the UK, but certainly that list has been drawn up almost as a backstop that, by and large, is probably unlikely to be used.
All right, Josh Mahoney, Chief Analyst at Scope Markets, thank you very much for being with us. Now, the Turkish Wealth Fund has signed a memorandum of understanding with the Iraq Development Fund in the presence of Turkey's ambassador to Baghdad, Anıl Bora İnan. The agreement signed in Baghdad includes strengthening cooperation in the fields of investment, trade and the economy. It also regulates the work of Turkish investment companies in Iraq.
We particularly see this memorandum of understanding signed between the Turkish Wealth Fund and the Development Fund of Iraq as an agreement that will pave the way for serious steps, not only at the regional level, but also at the global level between Turkey and Iraq. Therefore, this partnership will not be limited to investments within the two countries. We hope this will pave the way for joint investments in third countries, directed to serve the interests of both countries through these two funds.
Well, that's all your business news for now. We'll have plenty more in the News Hour.